You're not allowed to copy, record, or use any of the information that is contained within this presentation for any purpose whatsoever without the express written authorization of Wealth Guaranteed. This presentation is copyrighted. If you do not agree with these terms, please exit this video now. If you choose to remain viewing, your continued participation means that you're willfully consenting and agreeing to the above terms. You know, we are Wealth Guaranteed. Today we're going to cover our 12411 process, our proven legal process to opt out of the tax system legally. Here's what we will not cover, and this is very important to discuss. How to hide or not declare taxable income. This will get you in trouble with the IRS. How to hunt for a lot of obscure tax deductions. It's a waste of time. How to participate in tax evasion schemes. Not good. How to cook your books. How to violate federal, state, or local laws. Lastly, we will not cover how to deceive, defraud, lie, or misrepresent yourself to the US government. If this is what you're looking for, you will not find it at Wealth Guaranteed. Now let's start with the facts. A small fact about the IRS that not everyone knows. Did you know the IRS is not an agency of the federal government, and the federal government has stated so in open court? This fact was presented in the case Schultz versus the Internal Revenue Service in the United States Courts of Appeals. And they ruled that the IRS cannot apply force against a taxpayer without a court order either. Quoting from the above court decision, absent an effort to seek enforcement through a federal court, IRS summons apply no force to taxpayers, and no consequence whatever can befall a taxpayer who refuses, ignores, or otherwise does not comply with an IRS summons until that summons is backed by a federal court order. A taxpayer cannot be held in contempt, arrested, detained, or otherwise punished for refusing to comply with the original IRS summons, no matter the taxpayer's reasons or lack of reasons for so refusing. Very, very interesting. Not many people know that. Well, did you know that every year over 80 million Americans do not pay taxes? It's around 22% of our population, or 1 in 5 people. We have to stop and think, if it's 1 in 5 people, 1 in every 5 houses in our neighborhood, are they all criminals? They can't all be. Or do they just know something that most Americans do not? And did you know that 96% of Americans elected to become taxpayers voluntarily? And this election was made without your knowledge, by default consent, the first time you ever filed an IRS Form 1040. Signing this contract under your free will locked you into an obligation to file and pay income taxes every single year. And that contract that you sign stays in place until it's terminated. It lasts your entire lifetime. Of course, we are constantly reminded that paying taxes is mandatory for taxpayers. Even if you look it up on the internet after this call, you can go to the IRS website. They'll gladly tell you it's mandatory for taxpayers, but they never seem to mention that being a taxpayer is voluntary. And you have a choice. How do we know this? Let's check the Internal Revenue Code. Code of Federal Regulations, Title 26, also known as the Internal Revenue Code, subsection 601-602A, called Tax Return Forms and Instructions. So if you have a CPA, tax professional that you've worked with before, they've got to know how to do tax return forms and instructions. Let's see what it says. The Internal Revenue Service develops forms and instructions that explain the requirements of the Internal Revenue Code and regulations. The service distributes the forms and instructions to help taxpayers comply with the law. The tax system is based on voluntary compliance, and the taxpayers complete and return the forms with payment of any tax owed. We have it right there. The IRS creates and develops these forms that explain the requirements and regulations. They put these forms out there knowing that the system is based on voluntary compliance, with the expectation that only taxpayers complete this paperwork. Those are the only ones that must return the forms with payment of any tax owed. Of course, I'd like to take a second to debunk the most common misconceptions, common myths when it comes to the IRS. Because despite 80 million non-filers, the number of people that the IRS really looks into, relatively low. This data comes directly from the IRS's Criminal Investigation Department. Allow me to debunk some of the most common myths here. Remember, despite 80 million non-filers every year, the IRS Criminal Investigation Department initiated investigations for 1,409 of them, recommended prosecutions for 665. They sentenced 655 people. Out of 80 million non-filers, 655 were sentenced. That's about 13 people per state. Over the course of a year, how could the numbers be so low? The explanation is simple. The IRS will tell you. In the very first sentence of this paragraph, they say that voluntary compliance is the backbone of the US tax system. The IRS relies largely on taxpayers to report their income, calculate the amount of tax that they owe, and remit that amount to the IRS through withholdings or other payments. Once again, the second sentence says the IRS relies largely on taxpayers to report their income. The agency exists because of our voluntary compliance. In the second sentence, they'll tell you targets of tax fraud investigations include individuals who deliberately underreport or omit income from their tax returns. That's not something we're going to tell you to do, such as high income individuals who have a filing requirement but deliberately chose not to file returns and pay taxes owed. Today, we're going to show you how to file a return and never owe an income tax. We have to understand the reason the system is based on voluntary compliance is because it wasn't always this way. It wasn't written into our Constitution. Prior to 1913, the US economy thrived before the income tax was implemented, and it simply worked. So what happened? If you've ever seen this logo, then you know where I'm going with this. It all changed in 1913 when the Federal Reserve Act was signed into law by former President Woodrow Wilson. The Federal Reserve is a privately owned corporation owned by some of the world's most powerful international financiers. The name Federal Reserve is intentional because it's no more federal than Federal Express or American than Bank of America. It's a private corporation. And with the creation of the Federal Reserve System came the income tax. And ever since the Federal Reserve was enacted, 96% of the value of the dollar has been destroyed. And this is where inflation, the rising cost of living, the wealth gap, any issue we face in 2024 can be tied back to this. It was going on before COVID. So what does the Federal Reserve have to do with taxes? Everything. And here's why. It's because the IRS is the debt collection arm of the Federal Reserve. The Federal Reserve is a private corporation, which authorizes the US Treasury to print currency, which it loans to the United States with interest. And this is what creates our national debt. It's because every Federal Reserve note that gets printed into circulation becomes an obligation of the US government to pay back directly to the Federal Reserve with interest. That's bad, but it's even worse because Uncle Sam passes the bill directly to us. Paying off this national debt to these Federal Reserve bankers is the sole and only reason why we have an income tax. That's where 100% of our tax revenue goes. And the average taxpayer pays around $10,000 per year to the IRS because we all assume it's required. And this is a real $10,000 1934 Federal Reserve note. Most people would pay attention to the amount, but I see something else. I see a way to opt out of the tax system forever. And it was printed on every bill up until 1963. It was called the obligatory clause. The Treasury demanded that this be printed on every Federal Reserve note issued into circulation, and we've all seen it before. It says this note is legal tender for all debts, public and private, and is redeemable in lawful money at the United States Treasury or any Federal Reserve Bank. What does that mean? What is 12 U.S.C. 411? Issuance to reserve banks, nature of obligation and redemption. This is the law that came out to describe these brand new Federal Reserve notes. It's part of the original Federal Reserve Act. Federal Reserve notes, to be issued at the discretion of the Board of Governors of the Federal Reserve System for the purpose of making advances to Federal Reserve banks through the Federal Reserve agents, are hereinafter set forth and for no other purpose are authorized. So that first sentence says the Federal Reserve System controls this currency. They can print it and issue it whenever they want to. Next sentence, the said notes shall be obligations of the United States and shall be receivable by all national and member banks and Federal Reserve banks and for all taxes, custom, and other public dues. Second sentence is saying, we're going to pin it on the government. We're going to make the government pick up the tab on this. They have to pay the interest, but you guys can all treat it like normal money. You can transact with it anywhere. The last sentence is most powerful, the highlighted one. They shall be redeemed in lawful money on demand at the Treasury Department of the United States, in the city of Washington, D.C., or any Federal Reserve Bank. Very interesting. So when we read the full 12411, all three sentences, they're basically saying Federal Reserve notes, they're controlled and issued by the Federal Reserve Board of Governors. We can print them anytime we want to. We're going to pin the obligation on the US government. And if you don't like that for whatever reason, then go swap it out for non-taxable lawful money. That's what they're saying. They're giving us a choice. So why would they print a law on money? What are they telling us to redeem our Federal Reserve notes for? I kind of let the cat out of the bag, but lawful money for this. This is a United States note. This bill is non-taxable. And this is the result of redeeming Federal Reserve notes. This is what you end up with. Notice something missing? If we look at the left-hand side, there's no Federal Reserve seal. And that's actually codified into our laws. These US notes are not a Federal Reserve currency, therefore not subject to the US income tax associated with it. According to 31 US Code subsection 5115B2, United States currency notes may not be held or used for reserve. The Federal Reserve Bank, the IRS, they can't make profit with this currency. The only seal on this bill is the US Treasury symbol. This bill is not subject to the US income tax. The US Treasury is the only organization that backs this currency. They're not a tax collector. A United States note is a non-taxable paper currency that was issued from 1862 to 1971 in the United States. And this was our default currency prior to the creation of the Federal Reserve Bank. So where are they now? Why don't we ever see them? Well, it all started going downhill in 1971. By the order of former President Richard Nixon, lawful money was taken out of circulation in 1971. America was also taken off the gold standard. All currency printed since this fateful day, they're Federal Reserve notes, not backed by gold, not backed by silver, fiat currency. However, the law allowing Federal Reserve notes to be redeemed for non-taxable United States notes still exists. 12 U.S.C. 411 is still on the books. You still retain your right to redemption. America's best kept secret. Now, if we take a look back at our modern currency, we'll notice there's two agencies backing this bill. There's two symbols on the dollar. Were you ever told there was a difference? And did you know you always had a choice on which to use? We look on the left-hand side, we have the Federal Reserve symbol. And the use of this symbol goes through the Federal Reserve and creates a taxable event whenever you receive income. And the way that our laws are written, unless otherwise specified by you, any money you receive into your bank account are Federal Reserve notes, and it creates a taxable event. If you ever heard that phrase, you put more than $10,000 into your bank, they're going to report you to the IRS. Oh, it's because you're using their currency. Remember, the IRS is the debt collector for the Federal Reserve. However, you have the choice to bypass the IRS, bypass the Federal Reserve, and eliminate your tax liability completely. However, you have to be intentional, deliberate, and willful, but you have the choice to use the US Treasury symbol. And choosing to use the Treasury symbol bypasses the Federal Reserve and creates no taxable event when receiving income or depositing money into your bank account. And this is the process of redemption, creating lawful money using 12 U.S.C. 411. This is why the Treasury printed it on every single bill. So my point in saying all of this, my point in this entire presentation, the only thing I want to drive home is just remember 12 U.S.C. 411. Whenever receiving payment, you have the choice to deposit either taxable Federal Reserve notes or non-taxable United States notes. Keep in mind, unless otherwise specified by you, the presumption is that any money which you receive in your bank account creates a taxable event. So how do we avoid this taxable event? Simple. You must choose to redeem Federal Reserve notes for United States notes by using the green seal. This money is issued by the United States Congress, and directly authorized by the United States Constitution. This is also known as public credit. Once again, United States notes are not subject to any form of taxable income event ever. So what does this have to do with taxes? Everything. Because you have the ability to legally claim all of your income as lawful money using 12 USC 411. No matter how much or how little money you may have earned, doing this will completely eliminate your tax liability. How will we do this for you? Simple. We will eliminate your tax liability with our 12411 process on your income tax return. Bring all your earnings for the year, we will redeem every dime. And what will this do for you? Eliminate your tax liability no matter how much or how little money you may have earned. It will also grant you a full refund of any money withheld at the federal or state level. The 12411 process avoids taxable income events from occurring on the following: W-2 wages, 1099, rental income, capital gains. I don't want to run out of breath, but think about it this way. If there's a dollar sign in front of it, it can be lawful money. Whether it's earned or unearned, realized or unrealized, you still retain the right to redemption. How do we know this process works? Because the IRS has never challenged our 12411 process. All of our clients became tax exempt and received that confirmation from the Treasury, simply, easily, and legally. What do we mean by that? Here's an example. We see this client had $8,351 withheld, yet their refund check came back to be $8,516, an extra $164 in refund interest, a 101% refund. Here's another example, more interest. This is what happens when Wealth Guaranteed does this process properly. A couple more successful cases, all from this year course. One of our favorite clients, Darnell. I love this one because he got the shot of his head in the check. More successful examples. So here are the benefits of using our 12411 process to eliminate your tax liability. One, you'll immediately receive your full paycheck without any federal or state income tax withholding. You get to have all your bank and brokerage accounts flagged as non-taxable at the U.S. Department of Treasury. You contribute to lowering the national debt annually by redeeming or converting your Federal Reserve notes for non-taxable lawful money. Your U.S. citizenship or passport will not be affected. Your 401k, IRA, and pension will remain unaffected. You will retire on Social Security if you'd like and keep all those earnings tax-free. Once again, you contribute to lowering the national debt annually. I can't emphasize how important that is. You qualify for mortgages and loans because you still have tax returns, but now you don't have to pay. You can make investments, project your future without fear of capital gains taxes. You can sell real estate, you can sell stocks. It doesn't matter anymore. You can run your business without having to keep track of mileage and receipts and buy another filing cabinet just to prepare for tax season. You retain your eligibility for Social Security and Medicare. You're not going to forfeit that just because you're tax exempt. You come on board as a client once, you never pay the IRS or Wealth Guaranteed ever again. Going forward, you just work with our CPA. How do you qualify for the 12411 process? Simple. Have an address in one of the 50 states. Don't live in federal territory, Puerto Rico, Guam, DC, or etc. Earn your income in US dollars from a private corporation or organization. Do not be employed by the federal government. And it's that simple. If that's you, you qualify for the 12411 process. You can become a legal non-taxpayer. So we're not telling you to commit a crime. We're telling you to know you have a choice. And if you need help, we're here to support you.